Rémy Cointreau is a symbol of fancy things, a name that instantly brings to mind luxury, sophistication, and the art of celebration. For many, it's not just a drink, but an experience, a way to mark life's most memorable moments with a touch of French elegance and flair. The company's story is deeply rooted in centuries of French tradition, where expert craftsmanship and a passion for excellence have been passed down through generations. From the rolling vineyards of Cognac to the historic distilleries, every bottle is a testament to the dedication and artistry that define Rémy Cointreau. Among its most celebrated brands is Rémy Martin Cognac, a spirit renowned for its rich flavors and exceptional quality. Rémy Martin is more than just a drink. It's a symbol of prestige, enjoyed by connoisseurs and collectors around the world. But the Rémy Cointreau family doesn't stop there. It also includes iconic names like Cointreau, the famous orange liqueur, Metaxa, the legendary Greek spirit, Bruichladdich, a bold Scottish whiskey, Westland, a pioneer in American single malts, and Mount Gay, the world's oldest rum distillery. Each brand brings its own unique heritage and flavor to the table. Every one of these brands has a story to tell, a legacy shaped by innovation, tradition, and the pursuit of perfection. Together, they make Rémy Cointreau more than just a company that produces drinks. It's a curator of rare experiences, a collector of special moments, and a storyteller that connects people across cultures and generations. At the heart of Rémy Cointreau's business strategy is a focus on the very best, the ultra-premium and luxury market. They aim to reach people who not only appreciate quality, but also value the image and lifestyle that come with it. Their marketing is all about exclusivity, refinement, and the promise of something truly special. This approach has paid off, earning Rémy Cointreau a loyal following of customers around the globe. Their spirits are especially popular in key markets like the United States, China, and Europe, where discerning drinkers seek out the best and are willing to pay for it. The company's global reach and reputation for excellence have made it a leader in the world of luxury spirits. When Rémy Cointreau releases its financial results, it's not just about numbers, it's a window into the health of the entire luxury goods market. Investors, analysts, and industry insiders all pay close attention, looking for clues about trends, challenges, and opportunities in the world of high-end spirits. The company's financial year runs from 2025 to 2026, and the results for the first half were announced in November 2025. These reports offer a snapshot of how Rémy Cointreau is navigating a changing market, adapting to new consumer preferences, and responding to global economic pressures. The latest results reveal how the company is performing during a challenging period, marked by shifting demand, economic uncertainty, and increased competition. It's a test of their resilience, strategy, and ability to innovate in the face of adversity. So, let's take a closer look and uncork the story behind the numbers, discovering what makes Rémy Cointreau not just a business, but a legend in the world of luxury spirits. The first half of 2026 brought mixed results for Rémy Cointreau. Their regular sales went down by 4.2%, meaning people were buying less of their fancy drinks. Even more worrying, their regular operating profit dropped by 13.6% to $108.7 million, showing that things were tough even beyond just fewer sales. Even with these problems, their adjusted profit after taxes was $63.1 million, which was better than what experts thought. This gives a little bit of hope. This means the company managed its costs or other money matters well, even though their main business was struggling. Still, the main point is clear. Sales and profits are under a lot of pressure. The company is facing a difficult situation, and its main business is losing steam. The numbers tell a story of being strong, but also of big problems ahead.
The Cognac division, with Rémy Martin at its heart, has always been the crown jewel of the company's portfolio. For decades, it's been the main engine driving profits and growth, a symbol of luxury and tradition that sets the company apart from its competitors. So, when this part of the business stumbles, the impact is felt everywhere, from the boardroom to the bottom line. Any weakness here isn't just a minor setback, it's a major blow that ripples through the entire organization, affecting confidence, strategy, and even the company's reputation in the global market.
In the first half of 2026, the numbers told a worrying story. Cognac sales dropped by 4.3%, a decline that might seem small at first glance. But in a business built on steady growth, even a few percentage points can mean millions lost. Even more concerning, operating profit for the Cognac segment plunged by 18.3%. This sharp drop squeezed profit margins, making it much harder for the company to invest in new products, marketing, or expansion plans. The financial pressure is mounting, and it's forcing tough decisions at every level. The roots of these problems can be traced to two of the company's most important markets, the United States and China. Both have been pillars of growth for years, but now, they're sources of serious trouble.
In the US, the landscape has shifted dramatically since the pandemic. Consumers are tightening their belts, and the days of splurging on high-end spirits seem to be fading. People are going out less, and when they do, they're often choosing less expensive options. Retailers, noticing the slowdown, are hesitant to place new orders. Instead, they're focused on clearing out existing inventory, leading to fewer shipments and more unsold bottles gathering dust on the shelves. Meanwhile, in China, the economic recovery has been sluggish. The optimism that once fueled luxury spending has been replaced by caution and uncertainty. Shoppers are thinking twice before making big purchases, especially when it comes to premium brands like Rémy Martin. The appetite for luxury is still there, but it's tempered by concerns about the future.
For years, the US and China were the engines that powered the company's global ambitions, driving record sales and profits. Their enthusiasm for cognac helped shape the company's identity and fueled its expansion into new markets. But now, these same markets have become major obstacles. The challenges are complex, and there's no easy fix in sight. The result is clear. Cognac's downturn isn't just a financial issue. It's a reputational crisis that threatens the company's standing in the luxury world. To protect its legacy and restore confidence, the company must act quickly and decisively. The future of its most iconic product, and perhaps the company itself, depends on how it responds to this challenge.
While Cognac had a tough time, the liqueurs and spirits part of the business gave a much-needed boost. Brands like Cointreau, Metaxa, and Bruichladdich saw their regular operating profit go up by 9.9%, and their profit margins got better, reaching 16.3%.
This success shows how helpful it is to have different kinds of products. Strong brands in different areas can make up for weakness elsewhere.
Making things more fancy, good pricing, and keeping costs down helped this part of the business grow.
The liqueurs and spirits part is now a very important balance, making the company stronger overall.
As people around the world enjoy more cocktails and whiskey lovers try new things, this part of the business becomes even more important.
Having different products is proving to be Rémy Cointreau's secret weapon. The company's biggest problems are in the US and China, its two most important markets. In the US, after the pandemic, things are settling down, and stores selling off old stock have really cut down on how much people want fancy drinks. People are more careful about prices, and distributors are focused on selling what they already have. In China, the shaky economy and people not feeling confident have stopped luxury spending. These problems in both markets are really hurting sales and how much money the company makes. Until people start buying more in either place, it will be hard to grow. The way forward depends on these important markets getting better.
Besides sales, Rémy Cointreau is dealing with more debt and problems from currency changes. The ratio of its net debt to its earnings before interest, taxes, depreciation, and amortization has gone up to almost 3 times, from less than 2, as earnings shrink.
More debt means less flexibility and higher interest costs, adding financial risk.
Currency changes are another problem. Sales in dollars and yuan are worth less when changed into euros.
The company expects bad exchange rates to cut full-year sales by $50–60 million and operating profit by $25–30 million. Even if sales are the same underneath, they will look weaker on paper because of these outside forces.
It's a tough situation for any company that does business around the world.
Even after a tough first half, Rémy Cointreau is sticking to its plans for the whole year.
The company's leaders expect regular sales to stay the same or go down a little, with operating profit dropping by a low double-digit to mid-teen percentage.
This means things should get steady in the second half of the year, not a big recovery.
The company is hoping that stores in the US are finishing selling off old stock and that demand is hitting its lowest point.
But currency problems mean that the reported numbers will look worse than how the business is actually doing.
The real test will be whether key markets show signs of life during the important holiday and Lunar New Year times.
Getting things stable is the goal, but risks are still there.
These results come as Rémy Cointreau welcomes a new CEO, a very important change in leadership.
The new chief executive's first earnings call is a big test, needing both honesty and a clear plan.
Investors want to hear a believable plan to make Cognac strong again, keep liqueurs and spirits growing, and manage debt.
The CEO must talk about plans for the US and China, how they will spend money on advertising and pricing.
People will be watching closely for early signs from the new leaders.
The company isn't just facing a temporary slowdown, it's changing its top leadership.
The new CEO's choices and how they talk will shape the company's future.
Leadership will be just as important as the numbers themselves.
For investors, these results are a mixed bag. Profits are slipping, and Cognac, the company's flagship product, is facing some real headwinds. The numbers show a business that's feeling the pressure, especially in its most prestigious segment. For those who have followed Rémy Cointreau for years, this is a notable shift from the steady growth and premium pricing that once seemed almost guaranteed. The cognac market, long seen as a symbol of luxury and stability, is now showing signs of vulnerability, and that's making investors pause. But it's not all bad news. The company has managed to keep a tight grip on costs, showing discipline in a tough environment. Meanwhile, liqueurs and spirits are holding their own, even delivering some bright spots in the results. This resilience in other parts of the business is giving investors a reason to stay interested, even as Cognac stumbles.
The company's high value on the stock market reflects its reputation for luxury and exclusivity. Investors have long paid a premium for a piece of this iconic brand, trusting in its ability to command top dollar for its products. That reputation has been a powerful draw, making Rémy Cointreau a favorite among those seeking quality and prestige in their portfolios. But with the recent slowdown, there's a growing debate about whether that high value is still justified. Some are starting to question if the company can maintain its premium status in a changing market, or if the shine is beginning to fade. The uncertainty is making people think twice before jumping in.
Betting on Rémy Cointreau right now means betting on a turnaround in its two most important markets, the US and China. These countries have been the engines of growth for luxury spirits, and their economic health will play a huge role in the company's future. If demand picks up in these regions, Rémy Cointreau could quickly regain its momentum.
For optimistic investors, this moment might look like an opportunity, a chance to buy into a legendary brand at a discount, hoping for a rebound as global conditions improve. They see potential for recovery and growth, especially if the company can adapt and innovate. But for those who are more cautious, the risks are clear. The slowdown could last longer than expected, and there's no guarantee that the company will bounce back quickly. Doubts about the broader economy and changing consumer tastes add to the uncertainty.
Ultimately, Rémy Cointreau's future will depend on two things: a recovery in the global economy and the ability of its new CEO to steer the company through these choppy waters. Leadership will be tested, and strategic decisions made now could shape the company for years to come.
These results are more than just numbers. They're a signal to anyone watching Rémy Cointreau's journey. For investors, analysts, and fans of the brand, this is a pivotal moment that could define the next chapter. The next part of the story will be written by what happens in the market, and by the strength of the company's leadership. Every decision, every market move, will matter more than ever.
Only time will tell if Rémy Cointreau can get its sparkle back. But for now, all eyes are on the company as it faces one of its biggest tests yet.